Hello, my name's Rachel and welcome back to my channel. So in today's video, I'll be sharing with you a really simple beginner-friendly portfolio for free trade if you are just starting out and you want a nice global diversified portfolio. You also really want to see some strong returns as well. So I actually have a free trade portfolio already, which I hold individual stocks and shares in. However, I really wanted to simplify the approach for this video. So for this simple investment portfolio, I would simply select one trust and then one index fund. This would provide you with a nice global diversified portfolio and could potentially, looking at historic results, bring you in at 25% a year. This is based on historical performance, and obviously that isn't always indicative of future performance. However, I think it is interesting to get an idea of how these investments have performed historically and how they might perform for you in the future, potentially. So if I was starting at my free trade account today, I would probably be looking at investing a small amount into each one every single month, and I would invest the same amount into each investment every single month. So you might be thinking, why is she suggesting that I buy an index fund and a trust? I've just opened a free trade account and I want to be buying lots of individual stocks and shares. Now, it is very hard to beat the market by buying individual stocks and shares. So essentially, by buying an index fund, you are buying the whole of that specific market. And the actively managed trust that I'm going to suggest in this video has actually beaten the market. It obviously holds lots of individual stocks and shares within that trust, so you're not having to go out and buy individual stocks and shares, but you are still able to beat the market, which is very exciting. First investment I would suggest you go away and do your own research on and potentially put in your free trade account is the Vanguard Ftse All World Ucits ETF, which has the symbol VWRL. So the reason that I think this would be a really good ETF to get started with is obviously it is global. So looking at this geographical breakdown now, you can see that you have got a lot of diversity within this portfolio. Yes, 58.81% of it is based in the United States. However, this is something you would commonly expect to see. Then you've got the Eurozone, 8.32%, Japan, 6.41%, Asia, 6.26%. I'm not going to go through them all, I'm going to put them on the screen, but you get the idea. This is a nice global index fund. So you're not having to go through and select companies from all over the world, you've simply got them in one index fund. So looking at this portfolio's top 10 holdings, it's got a lot of the big players that you might have thought about investing in individually anyway. So it's got Microsoft, Apple, Amazon, Tesla, Alphabet, then Alphabet again, Meta Platforms, Nvidia, Taiwan Semiconductors Manufacturer, and JP Morgan Chase & Co. So for this index fund, the 5-year annualized returns are 13%. And you might be thinking, that's not anywhere near the 25% that you said you would get us to in this video. So by adding in an actively managed trust that has got stronger performance, but hasn't got the same level of diversity as this index fund, that is how we are going to get you there. So the trust that I would suggest you go away and do your own research on is the Scottish Mortgage Investment Trust. This is an investment trust that I am personally invested in. I have a few £1,000s invested into this investment trust, and I have been blown away by its performance for me in the last few years. The reason I'm suggesting that you don't go all in on the Scottish Mortgage Investment Trust is because it is very volatile, and as a beginner investor it might make you feel quite nervous because it does drop and rise quite considerably. It's also on the higher level of risk, which again, as a beginner, might make you feel quite uncomfortable. So by having this index fund as well, so the Vanguard Ftse All World Index Fund, you are kind of stabilizing your portfolio a little bit, and as a beginner, it might make you feel a bit more comfortable. So let's talk about the performance of this investment trust. Its 5-year annualized returns are 37.86%, which is absolutely phenomenal. Those are huge returns. So if you were to have a portfolio that was made up of 50% of the Scottish Mortgage Investment Trust and 50% of the Vanguard Ftse All World, you would be looking at a 5-year annualized return of just over 25%. Now, obviously, if you were to hold on to these investments over 5 years, you might need to be doing some rebalancing, because obviously if the Scottish Mortgage Investment Trust went up considerably in value, you would obviously end up with more than 50% of your portfolio in that investment trust. So the Scottish Mortgage Investment Trust, although it is a global trust, it is not as diversified, obviously, as the Ftse All-World. So the typical number of holdings that the Scottish Mortgage Investment Trust might have is between 50 and 100, whereas with that Ftse All-World investment, the Vanguard one that you'd be making, there are thousands and thousands of companies in that index. So this is much more concentrated, which is why you're probably seeing that volatility within this investment. However, this is how they have managed to achieve those incredible returns, because they're concentrated more heavily in high return growth stocks. You can see in the illustration that I featured in this video that had you invested £1,000 into the Scottish Mortgage Investment Trust 10 years ago, it would now be worth £13,893. That is versus the peer group index of £3,642. So obviously it has done much, much better than its equivalent index. And then again, looking at that geographical breakdown, as you can see, again, this is a global trust. It's actually the most popular trust here in the UK at the moment. So a lot of people are invested in the Scottish Mortgage Investment Trust. It's got nothing to do with mortgages whatsoever, just in case that's putting you off. That's just a historic name that's kind of held on. So again, as you'd expect to see, the biggest amount of holdings are in the US, so 53.18%. Then the Eurozone, 20.63%, then moving down to Asia, emerging at 17.72%. So its top 10 holdings, as you can see here, there isn't that much crossover with the top 10 holdings for the Vanguard Ftse All-World. So it's quite nice to see that your bigger holdings within the Scottish Mortgage Investment Trust are not crossing over with your biggest holdings in the Vanguard Ftse All-World, because otherwise you may as well just stick with one or the other investment if you're essentially buying the same thing, but they are quite different. So the top 10 holdings for the Scottish Mortgage Investment Trust are Moderna, Illumina, ASML Holdings, Tencent Holdings, Tesla, which again was in your Ftse All-World, Neo, Alibaba, Delivery Hero, Keyring, and then Amazon. So for me personally, if I was starting out with Freetrade again, I would have probably done something similar to this with my portfolio. I, as I said, hold the Scottish Mortgage Investment Trust because I am comfortable with that level of risk and its volatility, and I hold it, and I don't actually hold the Vanguard Ftse All-World. However, I can see that as a beginner, because it is an index fund, it might help you to feel more secure in your investments. You're also investing in such a wide range of companies that you're unlikely to see the same volatility that you would see in the Scottish Mortgage Investment Trust. So I think these would be two really good global investments to get started with. If you are just starting out on Freetrade, please always do go away and do your own research. I'm just telling you about the things that I would do as a DIY investor, just investing for myself, trying to grow my wealth. However, you might have very different goals to me. You might have more to invest than me. You might have less to invest than me. So definitely do your own research, check that you are happy with the risk that you're taking, and only invest in something that you feel that you fully understand. Thank you so much for taking the time to watch this video, and have a really lovely day. Happy investing, everybody. Bye-bye.